Hi everybody, Colin here again. This is the second video on the From Zero to Forex Hero. If you are new to the channel, go back and watch the first video. It's very important. There's a life story there of when I started and how I started Forex, from the lows of losing for the first time to the heights of where I am right now. Please watch it. It's very important. You'll find it's very educational. You'll probably maybe see a bit of yourself in the story, because I was once like a lot of traders, where I went into the market thinking I'm very optimistic. I'm going to do this. I'm going to do that. I'm going to make a fortune. And to be honest, the truth is that the first time into the market, it wasn't like that at all. So, one thing to say just before I continue, in the last video, because it was taken in one take, there was no editing, just one take. Excuse me. I made a slight error. What I said was I came back with £15,000. It wasn't. It was $15,000. £10,000 was what I came back with. And I've now worked that up to a multi-seven-figure amount. So I just wanted to clear that up. I like to keep it all honest and above board. It's very important. Over the next series of videos, you will learn. I will expect lots and lots and lots if you're new to Forex. If you've been Forex for years, you'll still use a lot of the things I do. Or you might learn something that just maybe, turns your trading around. The markets at the moment, if you are not switched on, you're not making money. The markets are nothing like what they used to be, and you've probably heard that so many times. So this was the reason why I have started this YouTube channel. Again, I'm sorry about the webinar type of start to the channel. I've got software now where I can edit and all the rest of it, but I have to learn it first. I've bought a decent camera, but I have to learn how to use that. But bear with me. In the next few videos, you'll start to see a change and start jazzing it up a bit. In a way, I'm nearly glad it's like this, where you're just seeing a screen, because I think it then focuses the mind on what the person is saying, and what I have to say is important. In the last video, I made a statement, and that statement is that there is about 5% of people that consistently make money on the Forex market. And out of that 5%, I would reckon, going on what I've done, I'm probably in the 1%. Now, as I said before, it's a big statement. However, it is true, because if you look at the latest statistics, about 95% of people's accounts get dwindled and dwindled away. Now, these series of videos is to help people, to educate them. I did mention in the last video about the education and how important it is. I'm still going by that, because it is very important. You're not up against brokers anymore. You're not even up against computers. You're up against AIs. And again, I'm doing a big video on this at a later date. But AIs knows exactly how traders' mind thinks. It has a processor that processes. We have a mind that thinks. There's a difference there. And again, when it comes to the AI side of things, do not miss that video, because I was very lucky last year, or was it the year before? No, it was last year. I was very lucky to be able to sit in on a presentation from a big company about investing, and they were showing off their actual AI. Now, I've never seen anything like this. Doesn't look like a computer at all. I was very surprised. I was looking to see this black box with a computer. It's not like that at all. It's an amazing piece of equipment. But they told to a large audience of bankers how the AI system works. So please do not miss that video when it comes out. It'll not be for a while because there's more important things about you as a trader, about me as a trader, that I want to get across first. I'm basically following on from the previous video. So if you, as I said before, if you haven't seen that first video, go back to it and then follow it each video as I bring them out, because it all makes sense. It's like a puzzle, and it's a puzzle that, you know, takes you from somewhere and leads you to somewhere, and that's what this whole thing's about. The other thing I want to say is stay to the very end, because there's a lot that you're going to learn from now to then. If you need a pause and replay, do that. I recommend you do that, or watch it again, because there's a lot of content. I'm going to break the content down. I'm going to mention them first, and then going to break it down, and then after I broke it down, I'm going to go into a bit of detail on each one. Okay, I left off in the last video where I wanted to educate myself, and I really did start to do that. I would have been in front of computers reading this, reading that, watching non-successful traders, just really anything that could educate myself. But the thing is, you can educate yourself to you're an absolute genius. But if you can't take the trade after, you know, learning everything about what you should be doing, if you can't take the trade, that's could be a source of a problem. Or if you took the trade and then all of a sudden, after a handful of pips, you pull out of the trade because you want to keep that money that you're making. As I was saying before, the market knows how a trader thinks, and the market does that. The market, if there's X amount of people in a trade and they see that a lot of people are in the trade, so what they try and do is they try and cut their loss, so they make it look like the market is turning. And at that stage, what traders do is they want to get out with the money that they have. They look like there's a massive retracement going to start, or this is what your mind plays tricks on you about. You pull out of it, and basically what you're doing is you're getting out of a trade that's just about to take off. The mindset, your mind is basically, it can be your enemy as well as your friend. Everybody who trades knows that. You read into the markets probably more than what you really need to, but it's making sure your mindset's right. If it's right, you're able to focus on a plan that searches for the trades and executes the trades. Well, it executes the trades when you think everything adds up. But this, it's all well and good, but if you're not holding your nerve, you're not sticking to your plan. Have you, I know I have, but have you ever sort of said to yourself, why on earth did I get out of that trade? It was doing so well. And look at the pips I could have made. If only, if only, if only. I have to certainly said that. I would say every trader who trades has said that. You know, what you've done is you have found a trade, you've done all the hard work, you've qualified the trade, you've waited to see and made sure that it's qualified, and then you plan your execution. Now what happens is you actually wait to see the takeoff. It takes off rightly. You think, well done, I've got it right this time. It starts to make a bit of money, and then the market does a retracement. The market does something to put that little doubt in your head, and as soon as that little doubt is in your head, it eats away at your thoughts, and then it makes you do one of two things. It makes you either pull out, or it makes you feel that you need to do something. Might be pull out, maybe take half the pips and let it run on, or whatever it may be. But the market does it for a reason. The market creates doubt because it knows the human mind. If it creates a doubt or a fear, the fear then escalates and makes you do something. Everybody is guilty of that. But whatever you do is you end up coming out of it with a lot less than what you should have. On an article that I read about, it must be about near a year ago, the average person pulls out at roughly about a quarter of the run. So the run is actually took off and it's done a retracement, say, and whatever you've pulled out, and you've ended up probably about a quarter of what you should have or you could have taken. Now, obviously that depends on time frames, etc., etc. But if it was on the 1 hour and it ran for 100 pips, the average trader, do the maths, will come out with about 25 pips. So the market wants this. This is what the market does. So what you're going to hear next is you're going to hear why traders do this. These are the common things that makes a trader pull out of the market. Okay, I'm going to list them first of all, and then I'm going to come back to them. Okay, so I'm going to sort of number them. Okay, as I'm going through. The number one thing is you've got into the market right, but you question yourself. Number two is you don't want a losing trade, so hence that's why you get out. Number three, you expect the market to turn against you. These are all things that so far will make you get out of the market with either a handful of pips or no pips, whatever it may be. Number four, you feel you shouldn't be in the markets while major news is about to come out. Number five, you feel you shouldn't be in it over a weekend period when the market closes. Number six, you tell yourself the run is over. So you tell yourself the run is over. In other words, you sort of tell yourself, no, this is not going any further, need to get out. Number seven, as a trader, for some strange reason, you change your plan. Number eight, the market changes your plan for you, but then continues your plan after you get out. That happens to a lot of people. I personally, that one was the one that really used to get me when I started trading. So, but again, I'm going to go into major details with all these, but these are the main reasons why you don't stay in, or the market does something, okay, or you're talked out of it, etc. Number nine, somebody changes your plan or mind. Again, wait for the reasonings. Number 10, something happens to you or to the market that makes you change your mind. Again, more details to come. Actually, I just want to add to that. If something happens to you outside of trading, that's what really wanted to get across there, because that's a big thing. And again, there'll be more details in that. Number 11, you're just stopped out. In other words, the market takes you out. Number 12, another trade that you're in makes a loss, so you close your positive trade to make up for that loss. I could go on and on about why you get out of trades. They're the main reasons, and the details are to follow. As a part of the education, that was one of the main things that I studied on when I first wanted to educate myself. I looked at what the overall picture was, what had made me lose money, or why did I not stay in trades when I could have. This was one of the main areas that I wanted to educate myself on, and I did, and I really took a lot of time thinking, where did I go wrong? What did I do? Because if you're getting out of trades early, you needed to really sort that out, because if you're getting out of trades early, that was the type of thing that was stealing your dreams, expectations, goals away from you. I found if you had a winning streak, even if it was, for 20, 30, 40 pips, I found the more times you won, even if it was only smaller amounts, it was good for the mindset. It built confidence, etc. But when I looked back at it all, I looked and I saw that, I saw that I was just getting out too soon, and if I had stick to the plan, I would have made a lot more pips. When I look back at basically the first time in the market, you do a lot of analysis of why, when, what, where. But I think it's better as a trader to go in and lose, because I think it actually makes you a better trader. I know that sounds stupid, but if you know what it's like to lose, I think it encourages you to want to do better, not want to feel like you felt before when you've lost. And you have to, I think as a trader, feel that feeling. I know most people feel it every day by losing and losing and losing, and they ask themselves, how do I get myself out of this? One of the things is to get yourself out of trades that you've been losing is to sit back and analyze what you're doing. And some people don't get it. Some people think, oh, no, I thought I was definitely right in that. The market just happened to do that, blah, 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 blah. And they always blame everybody else or the markets, whatever it is, than themselves. But deep down, it's them that's pulled the trigger. It's them that's got into the trade. And even if they've got it right, they're talking themselves out of it. And that's one thing that I have now learned. I have learned to, as soon as I'm in that trade, I'm in that trade. I don't get emotionally involved with that trade. Again, I'm going to teach you how not to get the emotions of losing. You have to lose that. You have to get yourself into a positive place. Or if you do lose the odd one, analyze it and say, you know what, I see exactly what I've done wrong there. That's an area of resistance. I should have known that it was going to stop there, or the Fibonacci told me that it was going to maybe stop there, or X, Y, Z. Whatever it may be, you need to know why you lost that trade. And some people can't do that. I know some people can't do that. I've talked to traders for years now, and what I do for some traders, I will look at their accounts. And again, this is in another video where I would offer a service where I look at their accounts, and I can tell within minutes of seeing it, the trades. All I need is the trade, the time, the pair, the lot size, and your accounts. Doesn't even need to be, I need you to know your account size, but I'm looking at that to see if you are not using your account management right, because that's where most people fail. They don't know how to do the account management. So I teach people how to work out their account management. I teach people why they lost that trade, because some people, they say, you say to them, do you know why? Oh yeah, I know why I lost that. And when you ask them why, they can't tell you, or they give you an absolute a wrong answer, that to why they've lost that trade. So in another video, I'll show that particular service. It does help people. I've turned people around from losing streaks to winning streaks just by having a chat on how they trade. It's as simple as that. How do you trade? Why do you trade like that? I nearly let people answer their own problems. But if they don't see it, I tell them. And I think I'm honest enough to do that. Um, you know, I know how difficult it is to get into a trade, execute it, wait for it to take off, hold your nerve, and then take it to where you think it's going to, and then getting out of it. But there's the other side of it where you think all those first things I said are all adding up, and you jump into it, and then it takes off a bit, and you think, yes, this is it, this is it, this is it, and then bang, the market goes against it, takes you out, or whatever, you pull the plug on it, whatever it may be. So, but you don't know why. And I certainly am in it long enough now where I can tell why. Why is it doing this? Why is it doing that? Why is it doing the other? I can tell. And this all again will become clear in additional videos. But I do believe that you need to lose something to learn from it. I think people don't actually do that until the bitter end, and then it's too late. You've lost your money, or you're about to lose your money, or you have to take the remainder of your money out because you're not making money, you're dependent on it. So there's so many reasons why you don't stay on a trade. There's so many pressures, there's so many ifs, ands and buts. But I hopefully over the next while are going to show you how to keep your nerve and how to get into the trade the right way. If you do all the things that I do, after a while you've become more confident. You become more that you're looking forward to the trading day. I look forward to the trading day every day. My hit ratio so far this year is no losing sales out of probably about 250 trades. And it's great to know that. It's great, that feeling. Yes, the market sometimes does something that is unexpected, but I don't have a crystal ball. But I've got nerve, and I've got knowledge. That also is important. If you've got knowledge, nerve, and know-how, they are the three of, well, I wouldn't say the main three, but they are definitely in the top 10 of things you must do to become successful. There's not a day that goes past that I think of the time that I lost, because do you know why? It drives me to win, because I know what it's like. I don't want to go into my personal history, but I had a very poor upbringing, etc. And all through my early life, I knew what it was like not to have. And I'm quite humble, actually, where I was to where I am right now. I've been blessed, I think. I really have. And what I want to do is I want to try to get everybody who I know to that stage. And it's possible. It is possible. You do have to go through the pain to make the gain. That's that old cheesy saying, but it's so true. But these are the things that pushes me every day to do well for myself, but mainly for my goals, my family, even friends. What gets me up and drives me. At the moment, I could just sit on the 4 hour, 1 hour and be happy, but I am helping other traders day in, day out to overcome that. If I was some of these other gurus, they wouldn't be doing that. Which leads me on to the next subject, where there's a lot of gurus out there who are only out there for themselves. I'm not at all like that. I'm out to help people who have been through the pain that I've been through, and want to do something about it and want to make a living. Not everybody's cut out to make a living in Forex. I'm telling you that right. About 95% of the people are at the way they are right now are not cut out to be Forex traders, equity traders, commodities, etc., etc. And what they are safer doing is not entering the market. they shouldn't be in trading, but they are in trading and they're losing money. So I know what I'm trying to do is I'm trying to educate people to the stage where they can get to maybe not the same sort of stage as myself, because not everybody can do that, but that they are winning and winning on a consistent basis. But as I said before, if you know what that feeling's like of losing, you don't want to be there again. So it gives you the strength to try and turn that around and to become a winner again, or maybe a winner for the first time. So saying all that, now we're going to go to the 1 to 12. The first one was traders question themselves. Traders can question themselves even when they've got it right. That's down to the market. The market works in a way where it can confuse you, and it can play on your mind substantially, and that's so true. It does it all the time. And like all these different things, we can nearly do a video on its own, but you need to and hopefully I'll be able to show you how where you can be in it the right way and have a technique or a way to continue and not let the market talk you out of it. But that's for traders who question themselves. It's usually the market that makes them question themselves and makes you sort of it nearly tricks your mind into making you think, oh, I need to get out of this. Number 2 was you don't want another losing trade. And do you know what? I think your mind sort of conditions you that if you're a trader, you're going to lose trades. And that works for about 95% of the market, where it plays tricks on you. So you're nearly expecting to lose. In other words, you've got so used to losing. You get a couple of wins, and then you expect you're going to lose, and that's another reason why you are sort of expecting that the market's going to get it's going to go against you. So you jump out because you've got some pips, and it's better than nothing sort of attitude. And by losing trades, it can also affect your mood, and it also affects, but you don't think about it, it also affects the people around you. One thing it shouldn't do is affect the people around you, because they're the people who are really supporting you, living with you, relying on you. I can tell you, I have seen so many traders that are very upbeat, and the next time you talk to them, they're like so downbeat. And that's because losing trades or getting out of trades or not having a plan affects you and affects everything that you do. And that could be why you're actually getting out of trades, because your mood has told you to get out of it. And actually, I do believe that in some cases, that traders actually do get depressed because of the losing streak. They don't see it, but their friends, their family, they see it. So it's not a nice place to be. That's not me. I had a rule in the early Forex trading days where if I lose 2 trades in a row, I stop trading completely. I stopped trading for a day or 2 at least, till I knew my mindset was right again. And that's the problem a lot of people have. They jump into trades, they lose a trade, then they jump into another trade, they lose a trade. That's a bad way to be, because you're on a losing streak. Why would you want to keep trading? That's why I used to take breaks. If I lost 2 in a row, I got out of a trade. Oh, sorry, out of trading. And I would have waited a day or 2 to get my mindset right. This was in the early days now of coming back. I would have got my mindset right again, so that I wasn't feeling like I was feeling 2 days ago. And it's very important to do that. Some people feel that they need to go back in again and win that money back straight away. But if their mind isn't right and they're doing something wrong, they're going to continue doing it wrong if they can't see what they're doing wrong. So that is very, very important. And the statistic of that, by the way, of that losing and then losing again, the third time of the loss is 99% that they will lose that third trade if they keep that mindset and keep doing what they think is right in their mind. Hence, that's why you should always, always start on a demo account. Wait till your mindset's right. Get used to winning. That's what you need to do. Get used to winning. Get used to the plan. To change the plan if it's not working. See why it's not working. But you're not actually involved in your own money. And if you're not involved in your own money and you start to see your win ratio going from 40% to 75%, I'm telling you, your head is high, you're feeling good, and you really want to trade. So, don't fall for the old, oh, I've lost there, I need to go in. I need to go in with a slightly bigger lot size to make up for that last lot. No, you're just going to keep on losing. Number 3 is very close to number 2, but number 3 is you expect it to turn against you. If you had the right plan, you shouldn't have that feeling. That's my personal opinion. If you have the right plan and you have a right structure, or if you have the right attitude, if even all your plan is all adding up, you shouldn't have that feeling. But one thing traders do is traders always anticipate the market is turning when really all what's happening is the market is retracing. But what traders see it is all the actual trend is turning, and they think if the trend is turning against them, what the market does, it makes them think that, and it forces their hand to close a trade, either a winning trade or they force their hand till a break-even point, or it forces their hand just to get out altogether with a loss. This is what the market does. This is what we know the market does. I feel so much about this one that I'm going to make a whole video on this particular issue. It's going to be about retracements and about how to predict where and what and when, and how you can turn this whole thing around rather than seeing it as the market turning. It's only a retracement. I'm going to devote a whole video on this in great detail, and plenty of examples to see exactly what the market is doing and to overcome it. Okay, we're going on to number 4. You feel that you shouldn't be in a trade when major news is about to come out. I usually find that's not usually the whole story. If that particular pair is trending, I find that this happens with one of two things. The news carries it on in the trend, therefore in the right direction, or it uses it to do the retracement that all trends have to do, all trades have to do, all pairs have to do. You hear the saying, market goes up and down in waves. It does go up and down in waves, or down and up in waves, whatever way. But it's very important for the market to do its retracement. Doesn't mean to say that trade's over. You've still got your Fibonacci's. The market could go right up to the 88% and still a retracement before carrying on down to the day extension. So again, all these things will be shown on how I educated myself, how these things happen, and they happen for a reason. That will all become clear, because after the retracement you always find it then goes back into trend, and that's the big thing here. So people sort of get out because they think that the market's going against them and they feel that they shouldn't be in it. and they think that the news coming along is going to go against them, because they don't know. I don't know many times you've seen where you're in a trend, let's say a trend going south, and the major on it. Let's take an example. Let's say it's the US GB, and it's selling at the moment, and the US comes out with great news, or good, better than expected news, and it starts to take off in the opposite direction, and you go, oh my goodness, I shouldn't have been in this, I knew I should have been out of this prior to this news, because it's going to go against me. And it does go up, and then all of a sudden it hits a certain percentage, and then bang, it turns back into trend again. Because if something's trending, the market wants to continue that trend, even if the news is good. I don't know many times you've seen good news come out and it goes the opposite direction. That's because that pair is trending in the opposite direction. That's the reason. And so many people say, oh, it's good news, let's jump in, it's brilliant news, let's jump in. And it starts to take off, and you say, great, and then bang, within one major bar, it just goes down, takes your stop loss out, or takes you out, or forces you out. Me personally, if I'm in a trending pair and there's news coming out, I stay in it. Because I know where, if I've got in at the top of that trend and it's now creeping slowly back up again, I'm not worried, because I'm still in the positive. I'm still in the plus. So I'm just waiting for the retracement to come, if it's a 61.8 or it's a 78%. And by the way, I don't believe in 76% as the true Fibonacci number. 78%, 88% is after that. So it's 78.6%. So if it goes to that, and I'm in at the very top of it, I'm still in pocket. And that's what most traders want to be. So all I'm saying to you is that these are things that make you jump out of the market when you should still be in it. I always say, if you're in it in the right direction, you've nothing to worry about. And it's so true, because I know a retracement has to come. If I'm in it from the very start, and most of my trades I'm in it from nearly the very start, and if I'm not, I wait for it to hit the very start, and then I'm in it. So the thing about it is if you're in it and it goes way down, and you've got 60 pips, let's say, at this stage, and it starts to creep back up again, you can bet your bottom dollar that the next time it hits off that move, it hits the 38 or the 50 or the 61.8 or whatever, it's going to go back down again. So it doesn't worry me. It really does not worry me. I've got to the stage where I'm nearly practically knowing roughly where it's going to go, and that's a big statement, but about 90% of the time, 95% of the time, I know roughly where it's going. And that's a good way to be. It's a way of keeping yourself so positive, if you know roughly. And if the market goes against you, well then, as it's coming up to maybe 10, 15, 20 pips, I would reanalyze it, look at all the time frames again, and I would see if it's going to take me out, well, I'm going to get 15, 20 pips out of it at least. And if it turns at that stage at the 20, if I do get out and it turns again, I just get back in it again. But usually you find, if you're in the 1 hour or even the 4 hour, even as little as 15 minutes, you can just write it out. Have the courage to write it out, have the nerve, and you'll find that will work. There will be a good video on this one, on all these points. There will be a good video on it down the line. If you know which way the market is actually going, that is the key till success. It doesn't matter if it's up and down, it really doesn't matter. The market has been doing that quite a lot recently. Do you know what? I just sit and look at it, take a quick look at it, then go to another pair. It really doesn't bother me, and I'd like you to get to that stage where the market doesn't bother you, because that's the battle. If you are winning and winning and winning, you know you're doing something right. So why worry about it? If you have got it right, you've got it right. It's about half the battle, really, isn't it? Knowing that you're trending in the same direction as the market. Okay, let's move on to number 5. You feel you shouldn't be in a trade over the weekend when the markets are closed. Okay, to be honest, if you look at this really, really closely, there's a couple of things that happen, right? Sometimes the market goes after, it does an analysis. That obviously they're not just sitting idle over the weekend. Their computers are working out. There's a million people in this pair going north, and there's a million and a half people going south. They're really, what they're trying to do is they're trying to see where they can open the market up to take the people that are in the wrong way out. That's the bottom line. That's what they do. They analyze the markets to see what they need to do to take your money for them to carry on with the trade, because they don't use the majority of their money to make money. Absolutely not. They use your money to make them money. So in other words, you losing all that money, they use that money to take the markets in the direction of where they want it to go. Okay, in other words, in the direction of the trend. Okay, I've seen, actually I've analysed this particularly, and there's a lot of cases where the Sunday open of the markets is the start of a new trend. I've seen it so many times. Again, I keep saying I'm going to show a video of this. I will do a video of this and give you the reasons why I think what I think. But I have seen the market opening at a certain point and maybe making a massive gap for it to come back up again and the trend to start from where it opened. I've seen that quite a few times, and they do that for their own pleasure of taking your money. They show you, it's usually a retracement they show before or the Friday close, and it gets people in. They say, oh, that's the upturn, and then it opens way south. Maybe I've seen it actually not that long ago. I seen a gap of nearly 100 pips on the return to the market on the or very close to 100 pips on the return to the market. Again, I'll show you videos on that in the near future. One of the other things, obviously, for the Sunday open is really what they're doing is they're chasing stops. They're chasing stop losses. They know how you think. They know where the amount of people have got in. They know if they put you under pressure, you'll close it, or they know where to open it or where to take it. Because all they have to do is really do that until the euro opening the following morning, because they know that market is going to put it back into trend again. So I've seen it so many times. If it's not a change in the market, that what they're doing is they open it at the Asian session on Sunday, and by the euro or the GB session the following morning, basically they are back to where they were, where the Friday close was. So they're back to where it should have been on the Friday close. So it's a continuation from there, but because they've jumped in 30, 40, 50, 60 pips lower, they've taken all those people out with stop losses. Stop loss is something I'm going to come to in a later video. You will get a surprise your life with that video, so watch out for it as well. And actually what they're doing is maybe fulfilling a counter trend as well. They're taking it to a counter trend point before carrying on in the same direction as well. That also happens quite a bit. It's only the retracement that they're doing, these big swings, and then by, as I said before, but the euro and the GB session, it is back to where it was on Friday and starting to go back into the same direction and start taking off from there. So, me personally, I don't get out of trades. If I'm in a trade that I've just taken, I just write it out, because I know I'm in it the right way. The trend is this way. Nothing to worry about. So me personally, I don't get out. at the weekends, and people are forced because they think that it's going to take their stop losses because they've seen their stop losses taken out before. The market knows all this. That's what the market does. The market wants you to be in having a stop loss. You know, they want it. You're trained. You're set. You're told so many times it's to protect your account. You're told so many times it's the thing to do. It's not the thing to do. I'm gonna tell you right now that I don't have stop losses in. I am so sure and so confident where my trades are going that I don't use them. And yeah, I'm going to tell you something even more so. Since I stopped using stop losses, I started to make money. Is that a big statement or what? It is a big statement, but it's the truth. The people who know me, the people who have watched me over the years, know that when I stopped using stop losses, I started making money. And it's, you know, you'll see in a later a video of actual a real account. I'm not going to show money because I don't think that is fair, but I don't like to do that. Nobody likes to do that. But I will show you the gains. I will show you the wins and losses. And I don't have very many losses. I think I had 3 losing trades all last year. This year I've had no losing trades whatsoever. None whatsoever. And we're now coming close to May. You know, so if I was putting stop losses in, I would probably have God knows how many losing trades. But I've learnt not to use that. And you might find that controversial, but that is the truth. And I will tell you why I stopped using stop losses. I will give you an instance of why I stopped doing that in a future video. And since then, my trades have gone up and up. My account has went up and up since then. And again, all showing fact, all showing. Nobody else is doing this in the markets. Showing a real account. I will show you X amount of trades taken in 1 month. I will have people who have taken those trades give testimony of their account, how it's gone up and up and up as well. And that's fact. That will happen. Anyway, we'll move on to the next one. Number 6 was you tell yourself the trade is over. This is the most common reason why traders close trades, believe it or not. They think the trade is over and they're glad just to get out with some pips, a lot of pips, average pips. They're just glad, and then they sort of maybe relax and say, oh God, that was a good trade. Makes them feel good that they've got a winning trade. And then they go back a day or two later and they say, oh my goodness, there was another 100 pips in that trade, or another 50 pips, or whatever it might be. But that's the usual reason. They tell themselves, they convince themselves that the trade is over and that they done the right thing. Now, don't get me wrong. If I'm in a trade and I've made some pips, I always make the rule that when I get out of a run, now I would catch, I wouldn't say, sometimes I don't catch all of the run, but I would catch a brave bit of it. But let's say I get out of it with 60 pips, 70 pips, whatever it may be, 50 pips, whatever it may be on a 15-minute time frame, and it retraces and gives another 10 or 15 pips. Do you know what? I don't care. I'm up 40, 50, 60 pips, whatever it may be. I'm up. I don't care if it makes another 15 pips. I always make the rule is that when I get out, I stay out. I stay out so that I wait for the next opportunity. So if something is going on a sell and I get 50, 60 pips and does a retracement, I think the trade is over there. It's hit the whatever whatever line I think it is, and all of a sudden I see it doing the retracement, then going down about another 10 or 15 pips. I honestly don't care before it takes back off to the north again and goes back into trending north. I don't care. I wait till it comes back to trending south again, and then I get into it because that's the direction of the trend. So that is important. I always find that if you be greedy, it will bite you in the butt. No questions asked, it will bite you in the butt. If you're greedy, you will find that the market goes against you. I always say that if you had the majority of pips out of a run on the 15, the 5, whatever time frame it may be, if you've got the majority of that run, I don't care about the extra 20 pips if it's a 1 hour, or if it's 30 pips on a 4 hour, whatever it may be, 50 pips even. I don't care. I've just made, I know if on my 4 hour trading, I'm making on average about over 200 pips on a run. In some cases more than that. I still have to do all the daily ones for the room that I have, but if I'm on the big ones, I don't care. I just wait for it to turn again and wait for it till do its retracement, and then I'm back in it again. And those sort of trades on the 4 hour, I'm looking at them maybe once or twice a day, and maybe just before major news, just to see where it is and see where the next area is of resistance or support, or where the take profit is. I always use take profits, but I don't use stop losses. So sometimes a trader will see, like, if they're in a buy trade, for instance, and it goes up, and they see a large wick to the north on a candle, they always think that the market is turning. But that is maybe an area of resistance and support. And it makes them feel that the market is about to turn, just to find that the market actually looks like it's turning and then all of a sudden does a higher high. So you have to learn a way of thinking, what is this candle suggesting? There's so many things that candles can suggest. You know, and there's a very good example on this page here. You've got a large candle, a large wick on a candle here, suggesting that the market is going to go up. But look how many times it's hit resistance. It's hit resistance 5 times prior to this, and I can bet you bottom dollar a lot of people have said, oh, this is going about to go up another bit, I'll go in it for 15-20 pips, just to be taken out here probably. Okay, and then people on that trade, that going up, thinks then, oh, there's a wick to the south, this is going to go up, I'm going to get in here. And look what happens, it comes back down again. You can see this consistently doing this, and people are fooled every time they see this wick. So, you know, they talked themselves out of this is now going to go up further here because we've got this long candle. It means that there's a lot of buyers in the market, and actually there wasn't. It was the market making it look like there was a lot of buyers still in the market before it took it down and took the people out. Okay, so that's just one example. Don't let you think that trades are over when they're not. And again, there is different techniques and ways of how to see past that. Another reason for that, why people sort of say to themselves, oh, this trend's over. They see something like this here and they think there's a counter trend coming, and it starts to take off, and they think that's the counter trend. So I've got in from here or here, and they say, right, I'm up 20 pips and I don't want to lose that 20 pips. So when they see this candle making a quite aggressive move to the north, they get out of it, and then all of a sudden they find that the market continues in their own way, because all the people that are in the wrong way the market is making money out of. All the people who jump out at this stage here, the market is making a severe amount of money as well. Even though they've made money, the market has also made a lot of money for a lot of people jumping out here thinking the market's over. So they get a cut, obviously, they get the spread, and they use that spread to push this further south. Okay. So that's another reason for you think the market is over. The trend is over. All of these points that I'm making so far, we're coming on to 7 next, but all of these points, I'm going to do a small video on it and give examples, show plenty of examples, and I think visually seeing something, I think you can learn from it. Okay, number 7, you change your mind. This is, well, it could be simply that you don't trust yourself. Have I made the right decision or not? That is another reason why people jump out of it. I always trust myself. I trust everything that I do. If you do something and you analyze it right and all the rest of it, you could have it in the, well, you should have it in the right direction. But if you don't know what you've done, or you've questioned yourself, or you thought you're right and then you have a slight doubt, that's what the market tries to do. And if you, or you just get into something thinking that's it, and then you sort of realize after, well, actually no, the next bar sort of telling me that that's not the case, and you sort of question yourself and you get out of it. That's another reason. Number 8, the market changes your mind, and then the direction that you were in continues after it changes your mind. Market's very good at this. And it could be that it takes your stop loss out, more than likely your stop loss out, and then it continues in the same direction. I don't know, many times this is, as I said before, this has happened, that it can be so frustrating. And you know my stance on the stop losses. When I stopped using them, I started to make money. Not that I'm asking you to do that. You need to be in a well-educated place before you can start doing that. I want to underline that you must be in a place where you know exactly what you're doing to do that. And that's why I teach people how to get there and stop using their stop losses, and they start making money. And again, I have testimonials about that from people who I've educated, and that they've stopped doing that, and that they've had great success. But I do not want you to do that. That's not what I'm saying. What I'm saying to you is you need to learn a lot of things before you can do that. Also, as I said before, the market actually tells you to put stop losses because they know they're the winners if you do that in most of the cases, because they go after them. You always hear the phrase stop hunting. It happens. Without stop losses, to be honest, they make billions and billions each year through stops. That is not a statement from me, that is fact. Again, in one of the videos about algorithms, there will be a part of it about stop losses in that. And as I said before, don't miss that. The market knows that the average stop is sometimes between, well, there's usually a different, where people put different stops. It's 5 pips from the previous high or low. It's 20 pips from where they get in, or 25 pips on average. That's where it is, between 20 and 25. They know all this. Don't be naive that they think, oh, I'm only a wee small fry, I don't have a big account. They know it, and they don't care how big your account is. They want your money. I mentioned about the AIs. The AIs are learning all the time. Again, I'm going to make a video about that, but there is evidence which I'll show of how they know everything about everybody. They analyze everybody who's a trader. They don't have to analyze. They don't need to analyze. All they need to know is where you've got in, where your stop is. But they can tell there is, and again, I will come back to this at some stage in the future. There is about 5 different types of trader out there, so they don't have to really know a lot. They only have to know 5 different types of trader, and that's how all the millions of traders that there is. There's 5 different types of trader, which I'll go through on a different video, and that's all they need to know, what type of trader you are, and they can analyze that quite quickly and find out of how you, the way that you trade. They learn, and a lot of the platforms now have this collection of information that they can sell, brokers can sell off to big corporations, so that, and that is going on, that they pass all their information and they take the risk off, the big boys take the risk off the broker, and then when the broker wins, they pay the smaller boy out. And when I mean smaller boy, I mean they pay the smaller broker X amount of pounds or whatever currency. Actually, when we're talking about that, over the years, I always sort of assumed that the markets knew that, but last year with that conference that I was able to get in on, I actually seen that they actually do know that. They know everything about that account, and they want that money out of that account. Because remember, they only make money when they make money of you. They use your money to make money. Everybody assumes they use their own money, and they absolutely don't. They might use it on certain occasions, but what the big boys usually do is they use the money. Remember, they get paid no matter what. They get paid if you lose, they get paid if you win. They use that money to force the market on. That's the bottom line. But after seeing that a year ago, I 100% now believe they know everything about each account, what they need to know. And when it comes to that AI video, definitely watch it, because you'll learn a lot. You'll be surprised at what they do and don't know. Okay, we're on to number 9. Someone changes your plan. Okay, this is usually straightforward. You have loads of opinions out there, and whoever's the more convincing, believe it or not, it can convince you to change your mind. And you have to be strong in these situations. But one thing that the reason why people change their mind is maybe they've invested interest in a certain main broker to make you change your mind so they make money. Could be a bit of that. Could be somebody who bigs himself up and makes them sound convincing, but they haven't a clue what they're talking about. You have to remember, any of these gurus out there do not have a crystal ball. They cannot tell you that the market is going to go here or here. The market does that. The market does that for its own greed and its own intentions, or its own political intentions. So there's no one man out there can say that market's going to go there, it's going to do here, or I think in 2 weeks' time that gold is going to go up, or this or that. It's all baloney. They do not have a crystal ball. Some of these major gurus, and I'm going to do a video on that, because there's a couple of people out there that really gets under my skin, who are giving information to a lot of people who believe them because they've came from, Stanley Morgan or wherever, and people are like flocking to these people thinking, that they know all, and you'll find out that they have an invested interest. Either they're making more money off webinars or whatever it may be, seminars or whatever, online rooms or whatever it may be. They're making more money out of that than they're trading. I have a room, but I make more money out of my own trading than I certainly make out of that room. But that's what I'm trying to say. No invested interest, but some of these guys are having big followings, but they're making people change their mind, or they're trying to tell them a certain strategy that worked maybe 3 or 4 years ago, but is not working now because of the way the market is. There will be a video on gurus, and again, I'll show a few people up. I don't want to really name names, but I'll give you scenarios. But yeah, I think you'll know who I'm talking about when I talk about these people, or these types of gurus is the way I'll be doing it. I'll not be doing names because the last thing I want is a slagging match. I really don't want that. But there is people out there who are having a financial gain on their decisions of what they're saying in the market. I remember one time there was this guy who is on TV who said that gold was going to go up and it was going to do this, and it started to go up, and then bang, within a day or two it went totally the opposite way, and the amount of money that the markets made out of that was colossal. And since then, I do not listen to anybody at all. I listen to no gurus. I read no sort of financial press that has its own agenda. I just trust myself, and I do all my own trading, and I stick to that. If you're influenced by people, that is one of the worst things you could do, because they might get some right, but the ones that you get wrong are worse than the ones that you get right. So be very careful. And that's when I usually basically make that saying, if you're in the market in the right direction, you have nothing to be concerned about. Okay, number 10. Something happens to you outside of trading that makes you close your trades. Now, this is a biggie. This is an absolute biggie. Unfortunately, life itself can make you close trades. You could be having family problems, financial problems, work problems, health problems. It could be any sort of problem, and it can affect the way that you trade and make bad decisions. That, I would say, also would be a biggie, where something is happening in your married life or financial or work, whatever it may be. It affects your mood, affects your thinking, and at that stage, if you're having any of those sorts of issues, you should just pull out of Forex until you're in a better frame of mind. More people lose money, and actually a lot of people bring it upon themselves. I'm very fortunate where I have a very, very understanding wife and family members, and I do not get myself into a situation where I, get down about something that I've done. And that's where a lot of people make a mistake. They keep, maybe it might be, they keep something back from their partner, it festers, or they're spending more than what they should be, or whatever it may be. The Forex is actually affecting their relationship, or whatever it may be. As I said before, there's so many reasons. But if it is affecting your trading, why would you trade more? Some people don't feel that they're under pressure, or they have a problem, and they only multiply to that, and it makes it worse. It makes it worse, and then it gives you all the losing streak, and you have that losing streak because of it. And I would say to you, be open and honest with your partner. Your partner is the person who cares about you the most. Your partner, your family, might be your church, might be, your work colleagues, whatever it may be. They're the people who know you and care for you the most. So why would you let Forex come between you and that? They're the people that if something goes wrong, you need to run to and talk to, and look for help, or ask for help, or whatever it may be. But a lot of people don't let it. They actually leave it and leave it and leave it to become such a financial problem, or whatever it may be, that it causes a problem. Your head goes down, your mindset goes down, your confidence goes down, everything goes down, and that alone makes you make mistakes, stupid mistakes. And if you were in that position, all you have to do is stop trading, get yourself to the right place. Never let yourself get to a stage where you're in so much stress and trouble and strife that it's affecting your trading, or if you're keeping something back from your partner, I would never dream of doing that. You need to get the principles of trading right. The principles of trading right is if the problem is your marriage, or you're causing problems in your marriage because of trading, it should never get to that. You should be sorting that out. That's the most important thing, because they're the people who pick you up when you've done something wrong. So I always say when you're a trader, you have to be very open and honest with your partner, wife, husband, whatever it may be, or your closest friends. Never let Forex get between you and them, because the day that you let that happen is the day that you're on a slippery slope, a very slippery slope indeed. Okay, so that is one of the reasons why people let outside things affect their trading. Because if you have a problem, you're not thinking straight. If you're not thinking straight, the market is going to take absolute advantage of it. I had actually wrote down, I just found it there. It could be that it could be family problems. These are what I put down as pointers. I haven't been reading this. I've just been I put it down so I can then sort of relate to it. It could be work related. It could be financially related. It could be just a knock on confidence. It could be, could be health with something, it could be absolutely anything that could knock your confidence. That'll do this. It could be a mood swing of some sort. You could be really in great form one morning, and by the end of the day, something has happened. You've had a phone call, you've had this, that, whatever it may be. It's knocked your confidence and your mood. It could be something that's stress related. You know what? Sometimes I call for what's called a reset. I call it a Forex reset. And what a reset is a break from the market. Even though I'm doing well, I still finding trades can be not stressful to me. It can be, well, sometimes it can sort of be that you've worked really, really hard to find a trade. You've found the trade, you've got in it, you've won. Or you've maybe found a few trades you've got in and you've got one. And you sort of say to yourself, you know what? I would love to do something different today. Bit of fly fishing, walk somewhere, whatever it may be. Get yourself into the habit. If you're winning, or even if you're losing, go for a Forex reset. Because you feel a lot better. Because Forex, I don't know about you, but I get it right, but it's harder to find trades now. There's a lot of noise in the markets. There's a lot of things happening in the market, and it's one of those things where subconsciously it's maybe getting to you, but you don't feel that. You just feel tired or whatever. So that's why I suggested you get a Forex reset, just to get away from the markets for a bit. Sometimes getting out of trades, or you took yourself out of trades, is that you might actually want to do that. You might want to get away. You might want to have a break, but a planned break. So in other words, a holiday or something like that. So you get out of trades. Now, I'm in trades when I go on holidays, and I always say to my partner, my wife, I always say to her that when she's getting ready at night time and in the morning time, I'm going to look on my iPad. Not, it's not an iPad, sorry, it's a tablet. I'm just going to go on and just keep an eye on what's been happening. And at that stage, if my trades are in reasonably good profit, or if I'm watching something that I was watching, now it's only maybe 15-20 minutes off the holiday in the morning and maybe the night, because geez, getting ready to go out. You know, I know my wife, she takes about half an hour just to pamper herself and get ready. So I know I have that, but I don't take that. I make a point of not doing that. What I make a point is getting in, looking what I need to do, in and out in 15 minutes, and then I will, make it clear that I'm now hers, even though she's not ready to go out yet. It'll take her another 15 minutes, you know, but I'll make it clear that I've now stopped doing what I'm doing, and it causes no pressure. But you might have got into a trade, you might have got out of trades, because if you are going holidays, you have to make sure you're looking after your investment. But some people think, right, I'm going holidays, I'm closing all them, I've got a few losses there, a couple of wins, I'm happy. The losses I would just find, if I know I'm in the right direction, or something is about to take off, I'll just use those wee times. And so, you're doing that for the Monday to Friday. Sometimes you're not even doing it at all because, you're winning, or you eventually have got out of everything. And then you're just, it doesn't stop me from not enjoying my holiday. No, but you still have to be aware you're financially in something. So you have to keep, the last holiday I was on, I closed trades over the holidays, but it's that harmony that you have to have, especially with your partner or your wife, husband, whatever it may be. You need to have harmony. You can't have it stressing your partner out or stressing you out because you can't do it. There has to be an understanding, but that's one of another reasons why people get in and out of trades. Again, these sorts of things are all sorts of things that'll be in the future. Number 11, you're stopped out. Straightforward enough. Simply, you're out because your stop loss has been taken out. There's really not more you can say on that. Again, we'll do a video on stop losses. Okay, number 12. Another losing trade forces you to close a winning trade to make up for the loss. Now, I can tell you that the market loves that type of trader, because they've made money on the loss. You've been in a winning position, and you have closed that winning position and still got nothing out of it because you lost. So the market wins on the loss, the win on the win, both ways, because of the spread. So they're winning it no matter what. The market loves that type of trader, or that type of trade. And I always say to people, if that's what you're doing, you're not winning. The market's winning every time. If you remember, I told you in the first video of how I came back after losing, and what I did was I got into a demo account and kept working for long periods of time till I got to the stage where I was hitting the 75% success win before opening a live account again. Well, on that particular one where a loss forces you to close a winning trade, if you were to get yourself to that situation by using a demo and that, you wouldn't have that problem, because there's things that you can do that will stop the market from getting a bigger percentage and you losing. And definitely there will be a video on this, because there's a way that on something that you can do to minimize that. But what you were trying to do is, you should be staying in your win trades for as long as you can and make as much pips. And if you have a losing trade, either get to it before it loses, or if you've got into a losing one straight away, there's something that you can do to keep that to an absolute limit. And again, I'll show you that in a later video. I've told people in the past, and there has been a couple of people who I've came across in my Forex lifetime, and I've seen, they've come to me for help, and I've seen time after time after time where they've opened an account and they've lost account. In one particular case, I think it was 7 times they came into the Forex thinking they were going to beat it, and they lost every time. And there comes a time when, as a trader, and to do the most utmost thing to help that other person is to actually tell them never take up trading again. They do not have the knack, or at least don't take it up until you know what you're doing, until you've done everything that I have told them to do. But there's just some people who will lose no matter what. No matter what they do, they will eventually lose all of their account. And I say to those people, and I'm saying it to that person who's maybe listening to this now, if you're not doing the right things, don't be trading a live account. And if you have been doing well on a demo account, and then when you come to your live account, you can't handle the pressure of a live account and you keep losing, do yourself a favor. Don't trade. It's the honest thing for you to do, your family, your work, whatever it may be, whatever is your goal in life, you're never going to reach it by trading Forex or whatever it is, commodities, futures, equities, etc. Because if you can't grasp it, I find that you have to be a certain person to be a trader. You have to be I find that people who are artistic, not autistic, that's a joke, artistic, people who can visualize things sometimes do better with a good education of how the markets work, etc. Or people who are people who are really get into a trade only when it hits A, B, C, and D, and they are able to listen to people who are. That's another thing why people don't do too well. They listen to somebody who's really good and they don't appreciate it, and they think, I'll do that, and they start to do that, and then they start to fall into their old ways again. At one person, I remember I gave them a lot of good advice and they were winning, and they came back to me and they said, something's wrong, I'm not winning as much. And I've said, well, show me a couple of trades, and they showed me a couple of trades they took, and I said to them, well, you're not doing what I told you to do. Oh, I am. No, you have not done what I've told you to do. Because of this, this, and this, and this. I told you to do this, this, and this, and this. You're doing this, but you're not doing this and this. And they don't see it. And I worry for that type of trader, because that type of trader is going from, I really need your help, I'll do everything that you want me to do. And then after a while, after they get confident in winning again, they start doing their own thing again, because they think that they're now sorted. And they have to be very careful, because the market is ruthless. And if you're not going to listen, then what's the point of trading? Okay, well that's mainly, we've come to the end of the webinar. There's a lot of things going to happen over the next wee while. A lot of those things I touched on, there's going to be that. We're going to continue with education. We're going to start showing examples of education where, you know, we're going to start doing things the way that I started to do things. So there'll be more breakdowns, there'll be more videos. I'm hoping to try and get another couple of videos out this week, believe it or not. So watch out for them. Everything in them are pure facts of what happened to me and what is usually happening to a lot of people when they first start out, or if they've been in it for a long time and they see that they're not winning what they used to win. You know, I've got a great testimonial coming up maybe in about the start of next week, of a chap who joined my room, and he sent me a lovely message just to say where he was at. And when I first met the guy, I knew he had it in him to do very well in the Forex. I can nearly tell. I've done webinars for other people. I've done, sorry, not webinars, seminars for other people. I've done seminars for myself. And the people that I meet, certain people, I know they're going to do really well because they've got the right mindset. mindset, they've got the right attitude. They want to learn, they want to make money. And this guy was in touch only last week with me, and he had already done a testimonial for me, and I was quite touched by that, and I was quite touched what he wrote to me. He didn't need to write to me and tell me these things, but I was really appreciative of what he had to say. But his testimonial will be probably sometime next week. I want to get a few more uh, uh, videos out about different things. We're going to be covering so many things, but Forex is so complex that you need to do that. I just want to show what I did that turned my life around totally, has changed my life completely. I live in a beautiful house. You know, I have somewhere to go to, you know, here where I live around the coast. You know, I have, you know, lovely wife. I have all the things that I ever dreamt from when I was a boy, when I was going through such a hard time. I had such a hard life, and I've been quite blessed, and I'm quite humbled that I've been able to turn that all around. My life has changed completely in the last 4 or 5 years, and it's all for the good. So, but all these things will come out in the next videos, etc., of how I turned it about. These are all a process. If you need to go through the video again and start to really, maybe I find if you write something down, it sticks in the brain a bit more. So by all means, stop the video, write it down, start it again, or just go through it a couple of times to try and get what I'm trying to say. I'm trying to keep it as simple as I possibly can so that I can get through to people. It's very important. I've been touched by a few messages that are coming through to me, people who used to know me, people who don't know me, but they can't wait to see more videos, and that's what's pushing me on, is really that I know I'm making a difference. I knew I made a difference for myself. I want to make a difference to other people. I think this video was mainly to give confidence of, and sort of tell people that the reasons why they're getting out too soon, and these are the things that are, so it sort of says that it's not only you this is happening to, because some people feel isolated when it comes to trading, and isolation is one of the worst things. But this is really I'm reaching out to the traders just to let you know that everybody goes through these things. These are the main reasons why people either are talked out of it, but all those things I talked about there, that everybody goes through that, and I'm hopefully when I start making the breakdown of these videos, it'll give you the confidence not to jump out too soon. It's one of the main things why people who are in the right way are not making the pips that they should. Again, in the future, I'm going to show you a strategy how you can absolute capitalize on a trend that's trending, even with the retracements. There's a fantastic way of making good pips out of it. I'll show you that in a future video. Okay, I'm going to head here now. What I want to say to you is, if you haven't seen the first video, please go and see it. Please go and look at it. I've done from zero to Forex Hero. That was to get people a platform to see what it's actually like to turn things around, because that's what happened. But if you haven't seen that first video, go and look at it. It'll all make sense into the second one. If you're, you know, seeing this video for the first time, and maybe have 50 videos out by then, always start from the first video and work your way. It'll all start to make sense. I can't keep doing recaps, so that's why it's important that you do that. Okay, if you're new, subscribe, hit the bell in the corner, because that will notify you when a new video comes out, and like, because that's very important too, because the more you like these videos, if there's something in it you like, you mightn't like it all, but there might be something in it you took on board or you like. What it does is it lets YouTube see that this video is being liked, so they put it in front of other people, like-minded people who are in Forex. Basically, that's what they do without you having to search for those people. So the more people that sees this, the better it is for those people to start making money in the Forex market. So if you like anything at all, like it, any questions, queries, by all means get in touch in the comments below. And I look forward to seeing you all in the next video, which will hopefully be out by the end of the week. And then I'm hopefully then putting one out as well at the weekend. Hopefully. I know of a lot of things on my plate at the moment, but I'm going to try and do that. So all I can say to you now is farewell, and I'll hopefully catch you very, very soon. Bye for now.